out-of-the-box thinker, love for home ownership, kind with over 21 years of combined mortgage and real estate experience. Tune in every week at this time for expert advice on everything you need to know about home ownership, finance, maintaining great credit, building wealth, and making your everyday life better, and how you can be financially successful today and tomorrow. Remember, love where you live or let Katrina fix it. Now, here's your host of Tampa Home Talk, Katrina Madewell.
Welcome to Tampa Home Talk. Welcome. You're listening to Tampa Home Talk. I'm your host, Katrina Madewell. Got Chris Dunn back there figuring out the board today.
There's like a poltergeist in here, I swear to God.
We have a fantastic show lined up for you today. We're going to go ahead and give out those studio call-in lines because we are live, and I'm sure you're going to have some questions for our guest today. 727-441-3000. 727-441-3000. So today, and every week we do our best to bring you a fantastic show in and around the mission of our talk show here, Tampa Home Talk. And our mission of our show is to help you keep and maintain great credit, live within your means, and build wealth. My team and I are passionate about it. We want to make sure that you love where you live, and if you don't, we are here to fix it. So we have a great show lined up today. We're going to talk about the truths and the myths busted on reverse mortgages. And there's been some recent negative publicity in the paper about reverse mortgages. So I think the timing is pretty appropriate for today's show. And, our guest that we have in studio with Access Reverse Mortgage is Mac Tennant. And Mac, he co-founded Reverse Access Mortgage in 2005. And they're just one of 10 certified reverse mortgage professionals here in the Tampa, Florida area. And there's only one out of 104 total nationwide. And Mac oversees everything from origination to funding, well over 1,200 families with reverse mortgages. These are FHA insured reverse mortgages. He also is passionate about education with regards to reverse mortgages, and he's an expert contributor for many other radio shows in the Bay Area. Some of my counterparts whose shows you've also been on. He helps educate financial planners, attorneys, and consumers about the myths and the truth with regards to home mortgages when you are talking about reverse mortgages. And Mac and his wife, Pam, are celebrating 37 years of marriage this month. Congratulations.
Thank you.
And you have 4 kids, 4 grandkids. You got a tall order there with the kids and the grandkids and the marriage. It was 17 years for my hubby and I recently, but 37's up there.
It is. It's amazing. The time's gone by so quick. We are just so blessed too. All our 4 kids and 4 grandkids live in the Tampa Bay area, which is amazing. So we get to see them on a regular basis.
Why would they want to live anywhere else? It's the best place ever to live.
Exactly.
Thank you so much for being my guest today.
Thanks for having me.
And I'm really excited to have you guys on. You guys do a number of things at the Board of Realtors, even to educate real estate agents about reverse mortgages, because it's something that, we can connect you guys with a lot of the right people. And, some of the things we'll talk about on the show today is the do's and don'ts, the cans and the nuts, and the frequently ask questions, some of the myths that you guys get that are in and around reverse mortgages, because not everything you see is true. You look at things in the paper that were recently published, and there's huge little pieces that are left out that are a vital part of what the big picture was and what really happened. So, when you think about a reverse mortgage, a great place to probably segue into this and talk about it is, let's talk about and describe exactly what a reverse mortgage is and how it works, because I think there's a lot of misconception for the general public and perhaps even for the person listening.
Sure. That's a question we get all the time, and there's a lot of people who have heard something negative about a reverse mortgage, and very often we try and pin down what they heard. They don't know the details, or it's inaccurate or outdated information. So a reverse mortgage is first off.
And like the mortgage industry right now, it's ever changing. You guys are experiencing some huge changes, which we'll talk about a little later in the show.
We are. There's just been some big changes to the program, but a reverse mortgage is very simple. It's not good and it's not evil. It's a financial planning tool. And used properly, it's one of the best things available for the baby boomer generation for planning a retirement strategy. And a reverse mortgage is just a mortgage, just like any other mortgage. You strictly borrow money.
It's a lien on the home.
There's no transfer of ownership any more than there is with any other mortgage.
Perfect. You really should repeat that point again.
Yeah, because that is a big misconception.
No transfer of ownership. So that means, mom and dad's name is on the deed. Mom and dad's name is going to stay on the deed. Just because you get a reverse mortgage, nothing changes. They still own their home. That's
right. And so it's just a question of they borrow as much as they want to borrow and as much as is available. There's a limit, of course, but then the interest is charged monthly, just like with a regular mortgage. But the big difference with this mortgage, when you get that monthly statement, you don't have to pay the interest and you don't have to pay any principal. So there's no payment required with a reverse mortgage. So your statement comes the next month and you owe a little bit more because they've added the interest from last month to your mortgage balance. So the amount you owe goes up a little bit each month.
And we were talking before the show, like, for example, and we'll get into several more examples as the show progresses, but we were talking about, like, for example, you may have a husband and the wife and one of the spouse passes, they lose them. They may lose the other half or a big chunk of the Social Security check that they were getting, and they were counting on that, and perhaps now they don't have enough money to live in their home and they really wanted to live there. And so the beauty of a reverse mortgage is you can take someone like that, once you evaluate all the pieces, of course, and pay off the mortgage that's there. So theoretically, you're going to take them from paying a mortgage every month to actually either receiving a mortgage payment or not having any payment at all.
Yeah,
is that
depending on how much equity they have, we may be able to get them some income in addition to paying off the mortgage. Or if they have a bigger mortgage, we can only pay off their existing mortgage, but that very often is the difference. If you save $800 a month, it's the equivalent of getting $800 a month in more income. And this is tax-free money. It's strictly a loan. So it's a great tool in that situation. About half of our borrowers have a free and clear home where they have no mortgage and they're deriving income or a line of credit. The other half typically have a mortgage and we're paying that off and maybe getting them income and a line of credit in addition.
Now, on those half, for example, the ones that have just worked so hard, they paid off the house, there's no mortgage, that was kind of like the goal, right? And then I guess as life progresses, your goals and the things that are important to you at that moment change.
Well, it's interesting. I like the analogy of a 401k because we do work through our careers to try and build up that nest egg for retirement, but there's going to come a time when we're going to start drawing that money out of there to live on. And it's inevitable. And I dread the day because, I like to see it grow every month. And when I start seeing it go down sometime in the not too distant future, probably, it's a similar thing with the reverse mortgage. You've got a 401k is an asset you can draw money from, cash flow. Your house is an asset, the same thing. You can derive income from that. Very similar.
And you work so hard your whole life to build your 401k, to pay off your mortgage. Why not, when you're retired, do you not, I don't know what Chris is doing back there on the soundboard. You're making sure you guys are paying attention.
A little mood music, right?
So it's what we're saying is, you work so hard to pay off your mortgage, to save money for retirement, and I think people should be thinking that it's the mindset that it's okay to take your money. It's okay to draw your money for retirement. It's okay to take your money back out of the house to live on and travel and do some of the things that you can do now that you're retired.
An interesting development in our industry in the last few years is the National Journal of Financial Planning has come out with a number of articles in the last couple of years recommending that everybody, as they approach retirement age, the minimum age for our product is 62 for at least one of the spouses.
That's a fantastic point that I was going to ask. So minimum age 62.
For at least
Any
one
exceptions
spouse.
Ever?
Well, as long as one spouse is 62, the other one can be under that age down to age 18 is the minimum.
So requirement, no bearing, they have to be 62 or older.
Right, okay. to get a reverse mortgage. But the financial planning industry is recommending everybody take a look at a reverse mortgage, even if they don't need money right now, but to set it up as a backup line of credit to have available instead of using credit cards
in a
time of financial distress. So I see it's very common. Somebody paid their grandchild's tuition or legal fees. Unfortunately, I see, or for whatever reason, they came up with some money. They put $40,000 on their credit cards. They missed a payment. Now the credit card's charging them 28% interest. So if they'd had a reverse mortgage in place at the time they needed the money, they could have drawn that money out that way instead. And it's a good strategy. There's a lot of reasons to do it now instead of waiting to do it later. But interest rates are at an extremely low place right now, which means you get maximum proceeds.
And live within your means, even if we see this a lot with older people. They'll try and like spoil the grandkids and give them more than what they have. And I think regardless of what stage you're at in life, you always need to live within your means.
The other thing we see very common is if you wait to draw your Social Security till you're 66 or whatever, you get quite a bit more.
A lot, substantially more.
So we've seen people use the strategy. Financial planners tend to recommend this. Get a reverse mortgage if you have an income gap from the time you're 62 till 66, and then you can draw the higher amount later. The numbers on that work out very well.
Absolutely. That makes total sense. I would do that in a minute. So you're listening to Tampa Home Talk. We have to take a really quick break. When we come back in a minute, we're going to talk about what are some of the most common myths that we see and we hear in the reverse mortgage. We'll touch on that article that was published recently in the paper. I'm not going to call anybody out, but we're going to talk about it. You're listening to Tampa Home Talk. I'm your host, Katrina Madewell. We'll be here same time, same place every week. We're going to take a quick break, hang out. We'll be back in a second.
Just how far you can take it, there's a way you can escape it. Shows this long back when you.
Hey, Katrina Madewell here. Just wanted to make sure you know how to reach us on our off-air number. If you'd like to connect with myself or any of our guests, you can call us at 813-377-2775. Again, this is Katrina Madewell, host of Tampa Home Talk, and to connect with myself or any guests we have on air, just call or text at 813-377-2775. 813-377-2775.
You've heard this before. Interest rates are at all-time record lows. But if your interest rate is 4% or above, you owe it to yourself to call Silverton Mortgage Specialist. Silverton is a direct lender, and the best part about this is that the entire loan process is handled in-house. From application to close, we do it all in the same building, which means that our loans close fast and our clients know what's going on every step of the way. Our contact info is located on TampaHometalk.com under Radio Show. What makes Silverton different? Products. We offer VA, FHA, USDA, and conventional loans pricing. Best rates with the lowest closing costs. Process everything in-house. It's handled right here and not outsourced to anyone that no one can reach. This way we can avoid surprises. Our people are simply the best, and we know you'll agree. What will closing Silverton Mortgage Specialist mean to you? A smooth process, real home loan value, and personal attention from real professionals. Silverton Mortgage Specialists are here to serve you. Visit TampaHometalk.com under Radio Show for all of our contact details. NMLS 109600 is an equal housing lender and Florida and Georgia residential mortgage licensee.
Aaron Davis here, owner of Hillsborough Title, serving all of Tampa Bay. Our service, strength, and knowledge make us different. From Polk County to the Gulf, Pasco to Manatee, Tampa Bay, we've got you covered. Visit us on the web at thebesttitle.com. That's thebesttitle.com.
This is the Tan Talk Radio Network.
Welcome back. You're listening to Tampa Home Talk. I'm your host, Katrina Madewell. In studio today, we have Mac Tennant with Access Reverse Mortgage, and we're talking about the truths and the myths busted on reverse mortgages. Thank you again for rejoining us today. If you missed any part of our show, you can catch it in its entirety because all of our shows are saved on a podcast. Just pop on over to any podcast player or to iTunes and search for Tampa Home Talk. You'll be able to pick it up there. We'll also post it on our website and our social feed. So just look for Tampa Home Talk on Facebook, Twitter, and across the web, and you'll be able to catch this entire show. And we were talking about like what exactly a reverse mortgage is at the beginning part of the show and how it works. And then I promised when we came back from the break, we'd talk about the common myths that people hear about reverse mortgages, and we'll touch on, the article that was in the paper recently.
Sure. I mean, the most common myth we already kind of talked about, and that is that there's a transfer of ownership, and there just isn't. I mean, it's just a mortgage. You strictly borrow money.
Yes, you still own your house, no change of ownership. It's just simply a loan like any other.
It's a loan, but there's never any payment due on it as long as you live in the property and pay your property taxes and insurance. So you live there for 5 or 10 years, you decide to move, you sell the house, pay off the balance, whatever money remains still belongs to the borrower, or you live out your days there. And now the last borrower passes away, the heirs now are going to have up to a year to sell the property. Same thing, they would pay off the balance of the reverse mortgage. Whatever money remains belongs to the estate still. They don't have to sell the house, but most times they do.
Right, which we talked about on a Saturday show that we're going to air. We had Legacy Estate Solutions in talking about estate sales and what happens when you have to liquidate the property and everything in it. So it's a great show Saturday. You might want to catch it at 5 p.m. same time, same place. The other thing too that you hear a lot is people don't want to leave a mess for their heirs.
Right, and that's a good point. The reverse mortgage is the only kind of residential mortgage you can get that is non-recourse. So,
talk about non-recourse. Can you explain what that means to the person listening?
Absolutely. It means there's no personal liability to the borrowers or the heirs. So when the day comes to sell the property, let's say the market has crashed again like it did a few years ago, and now you could have a situation where there was more owing on the reverse mortgage than the property is worth. Well, that's not a problem for the borrower at all, because FHA is going to step in and pay the shortfall when the house is sold. The borrower still lives out their days there. It doesn't matter what the home value does. As long as they live in the house, there's no payment due on the mortgage. If they decide to move, though, after 5 years and they're underwater, could happen, FHA would step in and pay any shortfall. So
it's a government loan being FHA. It's insured.
They insure the end value to the borrower. More importantly, they insure the end value to the investors who buy these loans. And all reverse mortgages, it doesn't matter where you get it, from me or from Fred Thompson, they all go down the same path. They're all insured by FHA and then sold through Ginnie Mae, another government-sponsored enterprise. And they sell them in big packages. The average last year was 6.6 million package in each bundle to insurance companies and pension funds and sovereign funds. Foreign governments buy them too.
Right. It's just like any other loan. It can change, who you make your payments to, where you send it. Only all that happens in the back end and you don't really see it.
It'll be invisible to the borrower.
Right.
But the big thing there is with the FHA guarantee on the end value of the house, the investors are willing to invest money at very low interest rates because it's almost as safe as a treasury bill to the investor buying them. If you think about that.
Well, it has insurance on it. Why not?
Federal government guarantee on the value of the collateral, right?
So, someone decides they're going to get a reverse mortgage. However that plays out, like maybe it eliminates the mortgage they already have because you paid it off and they're not going to have any payment. Or perhaps they are replacing that and getting an income stream from the reverse mortgage. So you're going to set that up originally, whatever that amount is. Let's say it's $250,000.
Okay.
The limit, right? Am I getting this right?
Well,
so set up the limit. They can never cancel or make that go away or require a payment from you later.
Okay. Yeah. So based on the home value and the age of the youngest borrower, so a 62-year-old can borrow about 50% of home value. So if you've got a $500,000 house, $500,000 house, you can borrow about $250,000 if you're 62. If you're quite a lot older, you could borrow as much as $350,000. But so somewhere in that range, that would be the line of credit set up. There may be some closing costs we have to take out of that. Depends which program you go with. But then you've got a line of credit. And once that amount is set, you're absolutely right. It doesn't matter what happens to the home value. That money is yours to borrow.
Let's do a comparison on that really quick, just since you're on point, we're talking about that. Mm-hmm. So a reverse mortgage is set up like a home equity line of credit. They can choose to draw on it if they want or not. They're only going to pay interest based on the amount of money they've actually borrowed. So if it's zero, it's zero. If it's $10,000, they're paying interest on $10,000 or whatever.
Right.
Compare that to a regular home equity line of credit that you'd walk into your bank and get. You have to qualify for those. So if you're not working or have enough income, there's a chance you're not going to be approved for that.
Very difficult to qualify today, even for good, worthy borrowers. The rules are so strict now on income and all that. We do have.
You can have perfect credit and be denied a home equity line of credit from a traditional bank.
Yeah, I heard that Ben Bernanke was denied a mortgage after he retired from the Fed.
Isn't that fabulous?
Yeah.
You got to love that. It's like full circle.
But,
so, and then your product, like the FHA home equity line, that's meant to either eliminate the payment, give you income, or have no payment at all.
Yeah, we can pay off an existing mortgage to eliminate a payment. We can generate a line of credit or a lifetime monthly income stream is one option. Or you can take a lump sum amount if you like, but unless you have a good purpose for it, we don't recommend that, but you can. That's right.
It's just such a good tool, like you say, in planning, especially if you have a shortfall for retirement and what you thought you had and you thought you had enough and you don't. So talk about who's a good candidate for a reverse mortgage. We talked earlier about a spouse maybe that passes and they've lost some of that income and now there's another spouse. What other scenarios are you seeing where it's a good match for someone?
Well, anytime you've got one borrower, at least one spouse, 62 or over, who have 35 to 50% equity in their home, anybody in that situation really should consider a reverse mortgage. And I know that's self-serving to say that, but there's good reasons for that right now. The amount of money you can borrow, I said it's based on appraised value and age, but it's also based on interest rate. And the formula to determine the amount you can borrow uses the current interest rate, the current cost of money. Well, as long as rates are where they are, everybody, with our company at least, is getting maximum proceeds. But if rates go up just a point or two, so let's say you decide to do this in 2 years, and you come back and now rates have gone up 2%, you might get 25% less money. It's extremely interest rate sensitive.
So are the rates fixed on these for the life of the loan?
We have adjustable and fixed rate. By far the most popular reverse mortgages are adjustable. The adjustables we have are very safe. They've got a 2% per year maximum change. They've got a 5% lifetime maximum
I'm
change.
going to pause you on that real quick because we need to dive in that a little bit deeper to explain to the person listening what that means and how that also compares to a traditional line of credit. You're listening to Tampa Home Talk. We're at the bottom of the hour. We're going to take a quick break, but hang tight. We're going to come back in a few minutes, talk about interest rates, fixed, adjustable, where the money comes from and how these interest rates are priced out and how they can change. Hang tight. We'll be back in just a minute. Curious what your Tampa home is worth? Here's an easy way to find out what homes like yours are selling for in today's market. Text the word value to 813-377-2775 for a free report on Tampa house prices. We'll send you a free report with up-to-the-minute statistics based on all homes for sale sold in your neighborhood over the last 6 months in all price ranges. To get your free report on Tampa Bay house prices, just call or text the word value to 813-377-2775.
You're buying a house. Congratulations. So while you're worrying about the paperwork, leave the moving part to us. We're Woody & Sons Moving Company, a Florida licensed and insured mover, and we offer same-day written estimates. Plus, no sneaky mileage, stairs, or additional stop fees. All we ask is that you check out our great ratings on Google and Angie's List, then go to woodyandsons.com to learn more. Whether you need a full-service pack and move or some extra hands, at Woody & Sons Moving Company, we move you.
You've heard this before. Interest rates are at all-time record lows. But if your interest rate is 4% or above, you owe it to yourself to call Silverton Mortgage Specialist. Silverton is a direct lender, and the best part about this is that the entire loan process is handled in-house. From application to close, we do it all in the same building, which means that our loans close fast and our clients know what's going on every step of the way. Our contact info is located on TampaHometalk.com under Radio Show. What makes Silverton different? Products. We offer VA, FHA, USDA, and conventional loans pricing. Best rates with the lowest closing costs. Process everything in-house. It's handled right here and not outsourced to anyone that no one can reach. This way we can avoid surprises. Our people are simply the best, and we know you'll agree. What will closing Silverton Mortgage Specialist mean to you? A smooth process, real home loan value, and personal attention from real professionals. Silverton Mortgage Specialists are here to serve you. Visit TampaHometalk.com under Radio Show for all of our contact details. NMLS 109600 is an equal housing lender and Florida and Georgia residential mortgage licensee.
Tampa Bay's Tan Talk. Entertaining and informative radio for the Sunshine State.
Hey, this is Hal Elrod, author of The Miracle Morning, and you are listening to Tampa Home Talk.
Welcome back. You're listening to Tampa Home Talk. I'm your hostess with the mostest, and in studio today we have Mac Tennant with Access Reverse Mortgage. Stop laughing at me, Chris. I'm just trying to make sure you're paying attention so you don't play more crazy music.
Yeah, you got me there.
So today we're talking about the facts, myths. We're going to bust those up and give you the truth behind reverse mortgages. If you missed any part of our earlier show, we talked so much about what a reverse mortgage is, how it works, common myths, and truths about it. And where we left off before the break, we were talking about, I asked you if it was a fixed rate or an adjustable loan. You said you have both, which is interesting. And I was surprised to know that someone would choose the adjustable over the fixed. So maybe you could explain why that is, because the rates are so low right now.
Yeah, the fixed rate has some drawbacks to it, but the adjustable, up until last June, the adjustable rate could change up to 10% over the life of the loan. As of last June, we have new products now that can only change 5%, so it's a lot safer product than it used to be, the adjustable. It's also about half as much as the fixed. So there's such a big gap between the adjustable and the fixed that it's anybody who analyzes the numbers, it's hard to justify going with the fixed. You're paying a huge penalty to get that comfort level. And you know, with a reverse mortgage, it's not nearly as scary to have an adjustable rate mortgage. The danger with a traditional mortgage, adjustable rate mortgage, is that rates go up, the payment becomes unaffordable, and you lose the house in foreclosure. With a reverse mortgage, that really can't happen because you're not making a payment. So if rates go up, and they'll go up and they'll come down, you get your monthly statement and it's just interesting. Oh, I owe a little bit more than I would have otherwise. But so the idea of rates going up and down really doesn't matter to you as long as you live in the house.
Right.
Even if you look back to 1982, which was the worst time for interest rates, prime hit 22%. The 30-day Treasury at that time went over 15%, but only for 1 month. And 90 days later, it was back under 10. And at that time, I had a 9 3/4 fixed myself at that time, so that was a normal rate. So rates.
A lot of people now don't remember those days. Our millennials think that's like impossible.
Yeah, I mean, that because house prices were, $70,000 on the water. But anyway, I'm dating myself there. But the thing with an adjustable reverse mortgage, they're really not a scary product. It's you want to look at, everybody has to analyze it themselves and make their decision. And we do offer fixed, certainly, but they're not nearly as popular as you'd think they might be.
So what's the short breakdown? It's the amount of money that you get back or the amount of credit that's set up if it's fixed versus adjustable? Is that what it is?
A fixed rate doesn't offer any option except a lump sum distribution.
Oh, okay.
If you have a mortgage that's going to use up the entire available funds, a fixed sometimes is a reasonably good fit, but
like if you're trying to just eliminate a mortgage payment altogether.
Right, but say you don't have a mortgage, so you just want money, you have to take all available funds up front, but there's a limit on how much you can take the first year on all reverse mortgages if you don't have a mortgage. You can only take 60% of your available funds in the first year. So with the fixed rate, there's a rule you have to take all the money, but they say you can only get 60%.
So how does that work?
Well, you only get 60%. You lose the other 40%.
Oh, so that's why you do the adjustables.
That's why the adjustable is much more popular. It's also, I think it's a much better chance of retaining equity in your home. The adjustable rate is about half the rate of the fixed rate.
And it's, some of the things I know we talked about also that we should mention, as far as the type of property allowed and the condition of the home, because those things are important. You're getting a mortgage, right? Someone has to actually physically go appraise it.
Right. We will, as part of the process, we'll have an appraiser come out and do an FHA appraisal. If there's repairs needed to the house, Usually, we can do what's called a repair set aside, and they set aside money at closing, and then the homeowner has 6 months to get any repairs done that were needed. A new roof is the big issue.
Yeah, that
run
might be a
into.
biggie for some people.
But that can be funded out of the reverse mortgage typically. Some things can't be. A safety issue cannot be on a repair set aside, but most repairs can. So it's not usually a big problem. When you use a reverse mortgage to buy a house, though, there cannot be any outstanding repairs. So it can only be.
That's a good point.
It has to be a house in.
That's FHA ready condition,
Exactly.
like what for any other FHA purchase.
Right.
The interesting thing, a lot of people don't even realize that you can actually buy a home with a reverse mortgage. So either, if maybe you don't want to liquidate all of your cash, like perhaps you have 150,000 cash from a sale of your home up north, you come here to Florida, you want to buy it, and instead of taking all that 150 and putting it into a property, you can actually keep that cash and put some of it down and get a loan for the rest, and it just sits on there.
That's right. The reverse mortgage for purchase came out in 2009. We did the first one ever done in the country. I had a partner when we started this. He's retired now, but he bought a 5,000 square foot house in Bardmore using a reverse mortgage. So the idea with a reverse mortgage for purchase is basically you've got $100,000 cash. You can buy a $100,000 house and have no mortgage payment, or you could buy a $200,000 house and have a house for the rest of your life with no mortgage payment, or like you said, conserve some of the cash would be the other angle. But
maybe a combination of both.
Exactly. So it just depends on the circumstances, but it gives a lot more flexibility in what house somebody can buy and what neighborhood they're going to live in.
That makes sense, right? Because you're getting older. You don't want to live in a neighborhood that you might have concerns for safety. I mean, I wouldn't.
Mm-hmm. That's exactly right.
And so what are the costs like to a client to do a reverse mortgage? Are they pretty traditional as with a regular mortgage, or do they vary?
Reverse mortgages have always had a reputation of being high closing costs. The reputation is partly deserved because FHA does charge a fee, but they've changed their fee structure lately where it used to be they charged 2% of the appraised value as their upfront fee. FHA did. You didn't pay it, but you owed it. They've changed that now. If you're drawing less than 60% of available funds the first year, their fee's only 0.5%. So that's been a big reduction, a big savings for people. That's just in the last year, I think. That's changed. If you're drawing over 60%, the fee is up a little bit. It's 2.5%. But the other fees,
that's pretty consistent for an FHA loan, and they're gonna essentially roll it in or include it in what eventually gets paid off.
In the balance, yeah. The other costs on a reverse mortgage, you have the same cost you have on any mortgage, doc stamps, title insurance, that sort of thing. You don't pay them, but you owe them. The way they calculate these fees on a reverse mortgage, they'll make them a little bit higher than, because on a traditional mortgage, the amount you owe at closing is the most you'll owe.
Because it's exactly what you're borrowing. It's never going to change. It can only go down on a regular loan.
It goes down from there. With a reverse mortgage, the amount you borrow at closing is typically the least you'll ever owe, and it goes up from there.
It's going to go up because you're either getting money every month or you're not making a mortgage payment every month.
That's right. So overall closing costs, we can do in some scenarios, we can do zero closing costs, literally zero closing costs, where we're able to pay all the closing costs for the borrower. In some cases, though, they can go up as high as around 4.5% of appraised value.
Now, do you ever see, like, there's no balloon mortgages or anything attached to this, and they have, there's no, it's just basically due on sale. So if they sell the property or if the homeowner dies, then it's due, the mortgage.
There's only a few ways that the loan can become due. It's if the last borrower dies, if you don't pay your property taxes and homeowner's insurance, if you sell the house, if you move and tell them about it,
so if you have one spouse that's 65, and let's say he married young and his spouse is 40, and then the 65-year-old guy dies in 10, 20 years, and the 45, 50-year-old's now still around, are they going to call that due?
No, under the new rules, this changed last August 4th also, under the new rules, what's called a non-borrowing spouse, the underage spouse, has rights to stay in the property the rest of their life. The same as the borrower did. Under the same exclusions apply pretty much exactly, where, until they die or sell or move.
So if they're getting a payment every month from the bank on the reverse mortgage, is it going to change?
It will stop.
It will stop.
Yeah. if there's a available line of credit upon the death of the older spouse, that is no longer available to the underage spouse. So it's something you'd want to plan for. Make sure there's no available
So
line of
it
credit.
would freeze it at that point, right? And
Yeah.
the interest would accrue, but it would cease if they were getting income payments. They wouldn't have to make a payment,
Right.
but they
One
also
payment
wouldn't get a
due,
payment.
But they can stay there for the rest of their life, but they can't get any more money out of the reverse mortgage, only if you have an underage spouse.
Well, it's nice they can't be kicked out anyway.
That's right.
Now,
There was a problem with that for a few years, a lot of bad press over it, so they changed the policy on it.
and you were talking about some of the recent changes, and these are like within the last couple weeks, right? And these are some reasons why you're seeing people now actually not get approved to do a reverse mortgage, because these are FHA insured loans. You know, they can make changes like they have on many other loan products. And you're seeing that, was it a couple weeks? Is that right?
Yeah, it was just 2 weeks ago. It was April 27th. I think it came into effect. It's something called financial assessment. For most people, it's meaningless. It just means we have to document a little more. We have to document income and that we never had to do before. But there is a certain segment of the population that what I would call the kind of the old traditional rescue situation where
The homeowner bailout type of position, right?
somebody got in trouble and didn't make their mortgage payments, and now they're in foreclosure. And we actually closed a loan in 8 days one time from initial contact to funding.
Because it was in foreclosure?
And we beat the foreclosure date. And people in that situation now are going to have a much tougher time getting a reverse mortgage. So
So they're going to be forced to sell if they've jacked up their credit or, paid stuff late. Are they looking at that? Like, what are they looking at?
They're looking at late payments, but it's...
Like, are they counting credit cards or mortgages or a little bit of everything?
What we have to do is demonstrate that there's sufficient income to meet ongoing obligations, and that will include credit cards or car payments or and house expenses, taxes, insurance, that sort of thing. So it's just really common sense stuff that somebody who can't meet the criteria probably shouldn't be staying in their house anyway. So it's not really a big deal there. The people that are going to be affected the worst, I think, are people who have paid late on their property taxes and homeowners insurance, and people who have late payments on other types of credit, over 90-day late payments in the last 1 or 2 years.
So are they looking at that? The taxes are delinquent or the insurance is due?
Yeah, that is a feature of the new qualification. But like I said,
And we're gonna touch on that a little bit more when we come back after the break, because that alludes to what we mentioned earlier, which was the big write-up in the paper front page about how someone got a reverse mortgage and lost their house. And we're gonna bust the myths in that story. We'll be back in just a minute.
great.
Just how long you can take it, there's a way you can escape it. Chose this long back when you were complacent, now you can't stand to fake it.
Hey, Katrina Madewell here. Just wanted to make sure you know how to reach us on our off-air number. If you'd like to connect with myself or any of our guests, you can call us at 813-377-2775. Again, this is Katrina Madewell, host of Tampa Home Talk, and to connect with myself or any guests we have on air, just call or text at 813-377-2775. 813-377-2775.
You're buying a house. Congratulations. So while you're worrying about the paperwork, leave the moving part to us. We're Woody & Sons Moving Company, a Florida licensed and insured mover, and we offer same-day written estimates. Plus, no sneaky mileage, stairs, or additional stop fees. All we ask is that you check out our great ratings on Google and Angie's List, then go to woodyandsons.com to learn more. Whether you need a full-service pack and move or some extra hands, at Woody & Sons Moving Company, we move you.
Hi, this is Aaron Davis, owner of Hillsborough Title. Hillsborough Title is a local, family-owned title agency here in Tampa Bay. Our service, strength, and knowledge make us different. We've served Tampa Bay area for over 30 years. From Polk County to the Gulf, Pasco to Manatee, Tampa Bay, we've got you covered. Call us at 813-712-8888 or visit us on the web at thebesttitle.com. That's thebesttitle.com.
Ask me about an inside secret to save several hundreds of dollars on your annual homeowner's insurance premium. Text the word WIND, W-I-N-D, to 813-377-2775. Again, 813-377-2775.
This is the Tan Talk Radio Network.
This is Michael J. Mayer, #1 international best-selling author of 7L, The 7 Levels of Communication, with the subtitle of Go From Relationships to Referrals. And someone who knows how to go from relationships to referrals is your host for Tampa Home Talk, Katrina Madewell. Listen, tell your friends, spread the word. You need to listen to Tampa Home Talk every Thursday and Saturday at 5 p.m.
Welcome back. You're listening to Tampa Home Talk. Thanks for rejoining us. If you are just catching our show today, stay tuned for the rest of the show because we have Mac Tennant in here with Access Reverse Mortgage, and we're talking about the truths and the myths busted with reverse mortgages. You can catch the show in its entirety. Just hop on over to TampaHometalk.com. We put all of our shows via a podcast on there. You can also search for Tampa Home Talk. It's on there. And if you want to connect with our guest today, just go to Tampa Home Talk. You can tweet us there, Facebook us, and all Mac's information is right on there. And he can answer all your questions if we didn't. Our studio call-in lines, we only have a couple minutes, but if you're listening and you have a question, 727-441-3000. If you want to ask Mac Tennant with Access Reverse Mortgage a question about a reverse mortgage, or maybe you missed something, you can ask us at 727-441-3000. So where we left off, we were talking about some of the changes in the financial world with basically these reverse mortgages. A couple weeks ago, they now cannot use this as a bailout tool. You know, if you have a spouse that's passed away, that's probably one you'll see pretty often. Like, you lose one spouse, they can't afford the payment, they're hanging on to the house too long, and now, as opposed to, either selling it early on or getting a reverse mortgage if they qualify, if they're 62 or older and they meet the guidelines, do it right then if you want to stay in your home. Don't wait and call after you've had late payments on the mortgage, because that's going to eliminate you for the most part, right?
Eliminate or take some of the money away.
Okay.
What they're doing is a set aside of taxes and insurance, kind of an escrow, which takes it out of your available funds. So for some people, that makes the loan not practical.
So they are escrowing for taxes and insurance, or they're not?
In a case where somebody doesn't meet the financial requirements, that's the solution. We don't really decline many people, but they might have to put up a lifetime's worth of taxes and insurance, which for a lot of people
might be a lot.
Could make the deal not.
So let's talk about that, because there was an article in the paper, front page, not too long ago, with a lady standing up front crying because she lost her house, and she's saying it's due to a reverse mortgage, but that was clearly not the case.
Yeah, she really didn't even say that. The Tampa Bay Times said that, but if you read the story, she got a reverse mortgage in 2007. She was in foreclosure at the time, coincidentally, but so this stopped a foreclosure for her. In 2009, they stopped paying their homeowners insurance. They actually got canceled because they didn't respond to a letter from the insurance company to cut some limbs. So they went from 2009 till 2014 without paying homeowners insurance. So now, last May, here they are in foreclosure court.
So the bank force-placed insurance?
They had force-placed insurance for 5 years.
Okay.
And if they'd had a traditional mortgage, they would have foreclosed after a year.
Right.
With force-placed. The lender, the reverse mortgage lender, was very lenient with them. After 5 years, so the judge said to them in foreclosure court, "Why are you surprised to be getting foreclosed on? It's been 5 years.
You've
without paying your
ignored
insurance."
notices for 5 years.
So the reverse mortgage had nothing to do with the foreclosure, but
it's going to happen in any case. If you don't pay your taxes and they're not escrowed, you're going to lose your house after 3 years.
The Tampa Bay Times didn't mention insurance on the front page. The entire front page was a slam on reverse mortgage. You go back into the inner pages and you find out what really happened. But that's such a problem, because how many people saw that front page and will never consider a reverse mortgage when it could be a lifesaver?
You should have took an ad out in the same paper, Mac. And I don't want to throw the paper under the bus again, but you should have took an ad out regurgitating what was said and highlighting the back part that everybody missed.
That'd be funny.
With your little name and phone number at the bottom. I can't stand when the media does that. Like, get rid of the hype and the crap. Just say it like it is, and don't fluff it or try to cover up the truth. Just put it right out there.
We are seeing a shift in coverage. I mean, it is turning a lot more positive lately, especially in the financial press. But the New York Times had an article last March. The lady standing in front of her house crying. It was her mother's house. It was in foreclosure. Well, if you read the article, her mother died 3 years ago. Well, you don't have 3 years to sell the house. You have a year. If your parents die, and it shouldn't have been any surprise, again, that there was a foreclosure proceeding going on, but the New York Times put a full-page feature in there, and crazy.
I mean, just like any other mortgage, there's some rules attached to it. You know, if you pull out a traditional mortgage and you look at it, there's provisions in that mortgage that say you can't, you know, keep, store, or maintain any hazardous substances on the property. Okay, so you can't build nuclear bombs and that kind of stuff. You know, there's other provisions that say if you don't pay your homeowner's insurance, they're going to force place it. If you're in an HOA community and you don't pay your HOA fees, the HOA can foreclose. So there's all these rules in the mortgage that generally say if you pay, you stay, you don't, you won't. But you have to pay attention to these rules and what they mean. And just because it's a reverse mortgage doesn't mean that it's exempt to the rules, because there's still rules.
And that's what we tell people is research. Well, I spend a lot of my time taking opportunities like this to speak on the radio. I teach a lot of classes at the Pinellas Realtor Organization for attorneys, financial planners, trying to get people to understand how these things work. And that's what advice I'd give to any listener out there is take time and research and learn for yourself. Don't trust what you read on the internet. A lot of it's wrong or outdated information. The rules have changed a lot. This is a great program for many people. It's almost impossible to lose a house with a reverse mortgage. I mean,
you really have to ignore notices and be a dud, right? Wouldn't you say?
Don't pay taxes, don't pay insurance, let the house get condemned. I mean, some pretty drastic things. You can lose a house.
Which that's a provision in any mortgage too. You have to keep and maintain it. You know, you can't vacate the property. If you do, the bank has a right to change locks. You know, I think we should do a whole show just on dissecting a mortgage, like what it says in there. That would be so much fun.
I don't know anything about forward mortgages. I've never done one, but I've done these for 11 years.
I do, and I'd love to bring some of one of the attorneys that we work with in just to kind of dissect it and talk about what each little provision means, because every once in a while you get that client that wants to read the whole thing all 19 pages.
Can I mention about the
Please do.
material we have?
Yes, you have an offer for our listeners. Thank you.
Yeah, Boston College has a Center for Retirement Studies, and they did a great study on using your house for retirement income. It's not just on reverse mortgage, but it covers the subject, and it really is one of the best reports we've ever read. It's a booklet. We bought up a quantity of them. If anybody wants one, if you contact me through the show, I'd be happy to mail you out one or email you a link to it. And we've got other material we can send you as well, just to start the process of research. And hopefully you'll learn if it's a good fit for you. We're happy to answer questions, of course, at any time. There's no cost or obligation to talk.
So it's an ebook to get information. And I can tell you here at Tampa Home Talk, we would never, ever have a guest in that would have ill intentions. You know, we research all of our guests before we have you guys on the show. We want to make sure that your reviews are good. We want to make sure that you're an upstanding company and that, you know, you're somebody that we would connect our clients and our friends to. And if you're not that person, we're not going to have you on the show. So that's why I'm happy to endorse your company. I'm happy to, you know, educate people about the truths behind reverse mortgages, because there is so much misconception out there.
There really is. And I know I'm biased, but we are a good company. We're A+ rated with Better Business Bureau. We've been in business 11 years, same location. We're the largest producer of reverse mortgages in the state of Florida of any company based in the state, but we're a family-owned business. My wife owns the company, and my two sons and myself work there, along with loan officers in the field. But we are a good company. We're happy to provide information to anybody that wants to find out.
And the one thing that I didn't mention yet that I definitely want to mention before we have to close the show, there's something called the CRMP designation, and you guys are CRMP designatees. You are, Mac, and there's only 104 of these in the country, and there's only 10 of these people in the state of Florida. Is that right?
Correct. That's correct. And
so what is that? Go ahead and break down so we don't have any acronyms.
Sure. Yeah.
CRMP.
It's Certified Reverse Mortgage Professional, and our national association, the National Reverse Mortgage Lenders Association, grants that designation. It's very strict criteria to get it. Obviously, only 100 of us in the country. 3 of those 100 in the country, 3 of the 10 in Florida, work with Access Reverse Mortgage. So
that's fantastic.
That. Yeah.
So you have 33% of those folks locked up with your company.
Pretty close, yeah.
I love it. Or almost, you know, round math.
30.
Round math. Yeah. Now, the other thing I want to touch on, too, is the celebrity endorsed reverse mortgages. So the late night infomercials you see, which should be your red flag anyway, right? Any late night infomercial up all night, sometimes those are like buyer beware. These can cost the person listening more, right?
Well, I mean, the Fred Thompson Company is the biggest. They're by far the biggest in the country. They're really good at what they do, but they're a telemarketing operation that you're going to deal with somebody in a call center in California or New York or Michigan. And the big difference there, first, we don't spend anything like what they do on marketing, so we do have a cost advantage. We can deliver that to the consumer, and we do. The other thing is, after you sign your application, it's going to be shipped off to be processed in some faraway place. And the guy you talked to on the phone or the girl was very professional and very friendly. We all are. But after
they're reading from a script,
after
right?
you sign that, they don't have your file anymore. So you're calling a call center, next available operator, just a different world in customer service. And we've won a number of nationwide customer service awards. We really are much better to deal with in the process.
So the loan could theoretically get lost in that land and also take longer, which can be urgent under these new rules because there are credit criteria now.
Well, it's much more complex now. The other end of the spectrum is there's a lot of what I would call forward mortgage or traditional mortgage companies that now put a tagline in their ad, we do reverse mortgages. Well, the majority of forward mortgage companies did 1 or 2 reverse mortgages last year. So there's only 7 companies in the Tampa Bay area that did more than 2.
And that's a big deal because the mortgage person doing it can screw it up.
Well, the closing rate in our industry is only 53%. And our company is well over 80%, and that's exactly the point. These are complex to get processed. You need an expert, somebody who's focused on it. And obviously I'm biased, but research and see what our customers say about us. We truly are happy to educate people on these. So call us if you'd like information or call it.
And education is key. And our off-air call-in number is 813-377-2775. You can call us, text us, or leave us a message there, and we're happy to connect you with Mac Tennant at Access Reverse Mortgage. And that number is 813-377-2775. You can call or text. It'll also connect you with me after the show is not live. 813-377-2775. Is there anything you'd like to say to wrap up the show?
If you want to walk into our office, we're down on Tyrone Boulevard, right across from the mall, right by the overpass, and be happy to see you.
Hop, skip, and a jump from the studio. Thanks so much for joining me today, Mac. I really enjoyed having you. I'm so happy that you're able to educate the consumer on reverse mortgages and deliver some of those facts and bust the myths. Thanks for joining us. You'll catch us here same time, same place every week. If you missed any part of Tampa Home Talk today, you can catch it on our website. Just pop on over to TampaHomeTalk.com. If you want to catch up with Mac, you can also go there. Check us out on Facebook and Twitter. Just search for Tampa Home Talk. And this week, we're out.
WTAN, Clearwater, Tampa Bay. WDCF, Dade City, Tampa Bay. WZHR, Zephyr Hills, Tampa Bay. Listen.
Piecing together the Amtrak crash, high-level meetings with the president today. I'm Ann Cates. The death toll now stands at 8, linked to the Amtrak derailment.